What do you make of the current supply and demand balance, and how does that bode for oil prices?
So first of all, I think it is impossible to predict oil prices. I don't think the producers can predict oil prices. I don't think the buyers can predict oil prices. And I think even the very, very large countries like Saudi Arabia can actually accurately predict oil prices. So the question that one must then ask is, am I compensated for taking risk from an investment perspective in terms of investing in oil companies? And our view is, given the changes that they've made to their capex, given that their ability to withstand volatility in oil prices, we think that there are attractive options within those businesses, particularly when you look at the dividend yields that you can get paid while you're sitting there and waiting.
So is that what distinguishes the oil majors that you want to play with and those that you don't? It's all about the dividend for you then?
It's not just the dividend, it's the dividend, it's the sustainability of the dividend, it's the potential growth of that, and it's what changes have those businesses done to their balance sheets to withstand lower oil prices, if indeed that is something that materializes.
I mean, we've seen Shell smash estimates, and then you have Statoil, which came in with weaker earnings than expected. Where's the optimism coming from? I mean, it's not coming from the oil price, is it?
So I think well, first of all, you've got to look at how much pessimism is actually built into the market. So you just simply need to be less pessimistic than others to make money in certain investments. And when you look broadly across the oil majors, what you want to avoid is some of the idiosyncratic risk in terms of individual companies. So our view is just to take a broad basket of these businesses rather than a bet on any one or two of them.
Manus, come in here.
Yeah, Lena, I want to draw your thoughts on this. I saw the Bank of Japan yesterday talking about a higher oil price up at 55, 60 bucks. I've got Goldman Sachs talking about 40 bucks on the bottom. How important is it that Saudi reasserts itself as a major swing producer? Because the lean is going to fall on Saudi, isn't it?
So, I mean, the reality is OPEC has on numerous occasions in the past tried to bring back almost the cartel approach to oil in terms of controlling supply, and it is virtually impossible to get all members to agree and to control that. So again, we go back to the point that there are, oil today is trading in the mid-40s. Maybe it can fall by $10 or $15. Maybe it could increase by $10 or $15. I think where we are is we say that while it's in that particular range, you can actually get paid by holding businesses that make money from this investment.
Lena, what's your expectation around the oil price? Could fall $10 or $15 or go up $10 or $15? Peter was saying, which gives us a range to play with, I guess.
Well, I think as a macroeconomist, my specialty is financial economics, and my theme is connecting the dots. So it's clear that oil prices are quite central to our understanding of the cyclical and structural health of the global economy. In demand terms, of course, oil prices have been behind the static, depressed inflation expectations, concerns about the fact that central banks have reached the limits of monetary policy. On the supply side, of course, the underbid energy markets have been emblematic of the overinvestment that's happened through commodity sectors, especially in emerging markets, over the past decade. But I think in the short term, this has been more of a supply rather than a demand story. The global economy is fairly strong, and I think probably at this point, oil prices are not really reflective of the strength of the global economy.
Lena, I like to pin it down to some hard numbers. On the CPF function here on the Bloomberg, we're looking at under $55 median estimate for 2017. Do you fall into that row?
Well, I'm a price taker when it comes to oil price predictions, as I'm a macroeconomist, and I can tell you that if I fall into that, I'll be actually quite optimistic about the future for the general sort of CPI measured inflation.
Peter, if I look at the oil majors and I'm thinking as a UK investor, maybe they perform a special function there, because you're talking about a lot of earnings coming from overseas, aren't you? And it's something of a shield from the weakness in the pound that we've seen.
Well, I mean, I think in general there are a lot of UK investors who have an illusion of wealth today because they're simply looking at their investments in a devalued currency. And you can make that argument for some of the oil majors. So if you are constrained to investing in UK stocks, these are an interesting way to cushion yourself of some of that weakness in sterling. But I think you need to look at the performance of businesses like BP, Shell, Total, Eni in common currency terms rather than in local currency terms.